this, India's economy grew by just 5.4% in the July to September period, which is much lower than the expected 6.5% and the central bank's forecast of 7%. Now, while the slowdown is concerning, India is still one of the fastest growing economies in the world. The agricultural sector performed better, with a growth of 3.5%, up from 2% in the previous quarter. However, the manufacturing sector saw a significant drop, growing only 2.2% compared to 7% earlier. Now, experts say that private spending, which makes up 60% of the economy, has been affected by high food prices, expensive loans, and slow wage growth, especially in cities. On the positive side, rural areas are showing signs of improvement in spending. Beyond this, the RBI has maintained its GDP growth projection for the financial year 2025 at 7.2%, down from 8.2% last fiscal.
India's real GDP growth slumped to a 7-quarter low of 5.4% in the July to September quarter. In fact, this is much lower than what economists were estimating, that is at 6.5%. Now, if you compare this figure of 5.4% to what came last year, well, that number stood at 8.1%. And in the April to June quarter, that number stood at 6.7%. So let's understand that where is this bulk of slowdown really coming in from? Well, this is on account of muted consumption sentiment, because there's been a rise in commodity prices, there's been a rise in inflation, and of course there is a sluggishness so far as top line is concerned. Then there is a manufacturing slowdown as well, in mining sector slowdown that is also attributed to the slow GDP growth. In fact, in the manufacturing sector, new export orders really moderated. But other than that, there are external factors as well. For instance, geopolitical uncertainty that got flared up, and that led to trade uncertainties. And then, of course, excess rainfall also that led to lower footfall in purchase of goods like cars, FMCG products as well. But economists who we have spoken to, they also say that growth is likely to remain subdued over the next few quarters as household consumption continues to moderate. And of course, investment growth is easing, and that in an environment of still high interest rates. So overall, while this is the print for Q2, economists also say that the overall print for this year is likely to moderate from what the RBI was penciling in, which is at 7%.
Now, with that, we're heading into a very short break, but do stay tuned because we'll be right back with more.